After the RBI's recent diktat on the listing of banking units separately, we'd seen a sharp drop in the stocks of Equitas and Ujjivan Finance. Investor sentiment also took a big knock. Let's do a three-point analysis of what spooked the investors and what's the outlook on two major affected companies, Ujjivan Financial Services and Equitas Holdings. 1. Why are investors worried right now? Well, as per the RBI's directive, both Ujjivan and Equitas will have to comply with the small bank license norms that require them to list their banking subsidiaries within 3 years and also maintain a promoter shareholding in the bank to at least 40% for a period of 5 years from the date of commencement of the business of their banks. Therefore, Equitas Bank has to be listed by September 4, 2019 and the promoter shareholding at 40% will have to be maintained till September 4, 2021. For Ujjivan, small banking financer has to be listed by January 31st, 2020 and the promoter has to maintain the shareholding till January 31st, 2022. While this restriction is indeed disappointing for the shareholders of the holding company, which has no business of its own, both the entities are working at ways to protect the interest of investors, including distribution of up to 60% shares of small finance bank to existing shareholders. 2. What's the financial situation of both these companies? Well, both Ujjivan and Equitas have reported strong performance in Q2. While Equitas has reported a 4.5 times growth in profitability driven by 22% growth in net interest income, strong surge in fees as well as contained costs. Ujjivan, on the other hand, posted profit after tax of 44 crores as against a loss in Q2 FY18 on the back of healthy growth in net interest income and also a steep decline in provisions. Now, the superlative performance was definitely backed by strong business growth with high growth in assets under management. The asset quality pain that had aggravated post-demonetization has also been showing improvement. Now, both Equitas and Ujjivan have managed to improve their interest margin sequentially. The improvement in liability profile is the key to improvement in interest margins. And now going forward, the diversified funding profile of these small finance banks with also increasingly reduced reliance on wholesale funding that should insulate these entities in the prevailing difficult funding environment for sure. 3. What's the outlook on both these companies? Well, if you see RBI's insistence on listing the small finance bank definitely would remain a medium-term dampener, there is an improvement in the operating environment and hence the earnings traction as well. Both Equitas and Ujjivan are in vantage position to capitalize on the weak competitive environment due to the comatose state of most of the PSU banks coupled with the challenging funding environment for the NBFCs as well. We see a long-term value in the stock prices in the current depressed sentiment towards these stocks, and long-term investors may consider a gradual accumulation.